Valuable tips on how to invest and earn money in the United States stock market. The United States stock market is one of the most powerful wealth-building tools in the world. It's where individuals, companies, and even governments invest to grow their money over time. Whether you're completely new to investing or you've already dipped your toes in, understanding how the stock market works, and how to use it strategically, can be life-changing. In this guide, we'll walk through the basics, explain different investment vehicles, break down common myths, and share actionable tips to help you earn money and protect your capital. By the end, you'll have a clearer roadmap for becoming a confident investor. At its core, the stock market is a platform where companies raise money by selling shares, small ownership stakes, to investors. When you buy a share of a company, you're buying a piece of its future profits. If the company grows and becomes more valuable, your shares increase in value, and you can sell them for a profit. But you don't have to stick only to individual stocks. There are also exchange-traded funds, ETFs, which bundle together many different companies into one investment, offering instant diversification. Popular U.S. brokerage apps like Robinhood, Fidelity, Charles Schwab, and Vanguard make it easier than ever for beginners to start investing with as little as $1. A key principle to remember is that the stock market rewards patience. Historically, the S&P 500, an index of 500 large United States companies, has returned about 8 to 10% annually over the long term, despite short-term ups and downs. That means if you invest $1,000 today and leave it untouched for 30 years, earning an average 10% return, you could end up with over $17,000 thanks to compound growth. But this only works if you resist the temptation to panic during market drops. Legendary investor Warren Buffett often says, the stock market is a device for transferring money from the impatient to the patient. One of the first decisions you'll face as an investor is whether to pick individual stocks or invest in index funds and ETFs. While buying shares of companies you believe in can be exciting, it's also risky if you put too much money into just one or two businesses. Index funds and ETFs, on the other hand, spread your investment across hundreds of companies, reducing your risk. For example, the Vanguard Total Stock Market ETF, VTI, gives you exposure to the entire United States stock market, from tech giants like Apple and Microsoft to small, growing firms you might never have heard of. Now, let's talk about one of the biggest myths about investing: that you need a lot of money to start. The truth is, many successful investors began with just a few $100s and grew their portfolios steadily over time. Thanks to fractional shares, you can now buy part of a stock, meaning you could invest in Amazon or Tesla for as little as $5. The key is consistency, investing a fixed amount every month. A strategy known as dollar cost averaging helps smooth out the impact of market volatility and builds wealth over time. Of course, investing also involves avoiding common mistakes. One of the most dangerous is chasing hype, buying stocks just because they're trending on social media or in the news. Many people bought into so-called meme stocks, like GameStop and AMC during the 2021 frenzy, only to see their investments crash when the hype faded. Instead of gambling on short-term trends, focus on companies with strong fundamentals, solid earnings, a competitive advantage, and room for growth in their industry. Another essential step is setting clear goals. Are you investing for retirement, buying a home, or building generational wealth? Your time horizon, the length of time you can leave your money invested, should shape your strategy. If you have decades before you'll need the money, you can afford to take on more risk with stocks and growth-oriented funds. If your goal is only a few years away, safer investments like bonds or high-yield savings accounts may be better. Diversification is also your best friend in reducing risk. This means not only spreading your investments across multiple companies but also across different sectors, like technology, healthcare, and energy, and even different asset classes, stocks, bonds, real estate investment trusts, or REITs. The idea is simple. If one part of your portfolio drops, another part may rise, balancing your returns. Here are powerful suggestions to earn money in the United States stock market. 1. Start early. Even small investments grow significantly over decades thanks to compounding. 2. Use tax-advantaged accounts like 401ks and IRAs, which allow your investments to grow tax-deferred or even tax-free. 3. Reinvest dividends rather than cashing them out, so your money can generate more returns over time. 4. Practice. Buy and hold. Avoid frequent trading, which can rack up fees and taxes. 5. Review your portfolio yearly and adjust based on your goals and risk tolerance. 6. Consider value investing, buying high-quality companies at a discount when the market overreacts. 7. Don't invest money you can't afford to leave untouched for at least 5 years. If you're worried about losing money, okay, no problem. You don't need to invest. But remember that the greatest risk in investing is not investing at all. Inflation erodes the value of your cash over time, so letting your money sit in a checking account means it's slowly losing purchasing power. The stock market, while volatile in the short term, has historically beaten inflation in the long run. Another powerful tip for succeeding in the US stock market is to master the art of long-term compounding. Many beginners focus on short-term price swings, but history shows that patient investors who reinvest dividends and hold quality companies for years often outperform frequent traders. Compounding works like a snowball. As your investments generate returns, those returns are reinvested, creating even larger returns over time. For example, if you invest $500 per month in a diversified index fund with an average annual return of 8%, you could have around $750,000 in 30 years, without needing to time the market. The key is to stay consistent, avoid panic selling during downturns, and let time do the heavy lifting for your wealth. If you are just starting in the stock market, it's a smart idea to seek professional guidance before making investment decisions. Financial advisors, brokerage firms, and even dedicated investment platforms can help you understand which stocks or funds align with your goals, risk tolerance, and time horizon. They have the expertise to analyze market trends, company performance, and economic indicators, information that can be overwhelming for a beginner. When choosing help, look for licensed professionals or reputable companies with transparent fees and a track record of success. You can schedule a consultation to discuss your financial objectives, whether they are long-term wealth building, saving for retirement, or generating passive income. Many advisors also offer personalized strategies and regular portfolio reviews to keep your investments on track. Remember, the right advisor won't just tell you what to buy, they will teach you why certain investments fit your profile. This guidance can help you avoid impulsive decisions, limit unnecessary risks, and stay committed to your long-term plan even when the market becomes volatile. In short, investing with expert support can be the difference between guessing and growing. Finally, always keep learning. The best investors treat knowledge as their greatest asset. Read books on investing, follow reputable financial news sources, and take online courses to understand how the market works. And perhaps most importantly, develop the discipline to stick to your plan, even when the market is unpredictable. The road to wealth in the stock market is rarely straight, but with patience, discipline, and smart decisions, it can lead to life-changing results. The economy affects everyone, including you. But do you actually understand it? For example, why do prices keep rising? Why are some countries rich while others stay poor? Why does your paycheck never seem to be enough? What can you do, personally, to change your financial future? This ebook is exactly what you've been looking for. Understanding Economy: How You Can Improve Your Life is an excellent must-read ebook to help you improve your life. What this ebook will teach you: how the global economy actually works, in simple and practical language. The real reasons behind inflation, poverty, inequality, and wealth. The truth about capitalism, socialism, government spending, and taxes. Why some people escape poverty, and how you can too. How to start your own business, manage money wisely, and protect yourself in tough times. Why crime, corruption, and bad leadership destroy a nation's economy, and what honest people must do. Why sustainability matters, and how a strong economy can exist with a healthy planet. The secrets behind economy, cost of living, interest rates, and personal wealth building. How to take control of your financial life, no matter where you start from, and much more. This is not a boring academic textbook full of formulas. It's a practical guide written by me who believes that economic knowledge can empower everyday people. This ebook has about 480 pages, explained in a simple way so that everyone can understand economics. This ebook is perfect for you. Many people are buying this ebook to better understand how the economy works, and thus improving their lives. The link is https://bit.ly/understanding economy. Can you please buy this ebook and at the same time strengthen this channel? It's very cheap. As soon as you make the payment, you can instantly download this excellent ebook. And you can start reading it and benefit greatly, very easy. A small investment that will transform how you think, act, and thrive. Don't just survive the economy, understand it, and use it to totally benefit you. Could you please buy the ebook, like this video, write your comments, and watch the other videos of this channel? Thank you very much for watching this video.